Good morning, everyone, and welcome to Focusing Asia, Scaling Token Economy to New Heights. My name is Catherine, and I'm a reporter for Forbes Asia. I'll be the moderator for today's panel. And without further ado, let's dive right in to panel introductions, so each of our speakers can briefly introduce themselves. Over to you, Gerald.
Thank you so much, Catherine, and thank you, everyone, for allowing me to join the panel today. My name is Gerald Goh. I'm a co-founder of Sygnum, and I run our Singapore headquarters. Very quickly, I'll just give a quick brief intro into Sygnum. Sygnum is a digital asset fintech platform with a Swiss banking license and a capital market services license in Singapore. Our mission is to empower everyone everywhere to own their digital assets with complete trust.
That's great. Ken, would you like to weigh in?
Yeah, thanks, Kat, and thanks everyone for dialing in. My name is Ken. I'm the head of APAC for Abra, and I focus mainly on high net worth and institutional sales. In a nutshell, Abra is a global crypto bank where we offer high yield on crypto deposits. And on the flip side, we offer loans against crypto. So we see ourselves as one of the safest yields in crypto. And we offer our services primarily via mobile app in 150 different countries globally, close to 2 million users today. I've been in crypto full-time since 2018, but before that, career in finance was most recently with JP Morgan.
Great. And Scott?
Hi, everyone. Thanks for having me. My name is Scott. I'm an advisor for Global Founders Capital, specifically focusing in crypto/Web3 investments, where I lead due diligence and also technical portfolio support. I'm also probably the youngest person in this panel, so I'm super excited to kind of learn from all my seniors here. Over the past 2 decades, of course, GFC have back over 500 entrepreneurs worldwide, and most recently, GFC is also active in investing in the Web3 space through companies such as Animoca, Ledger, TechSpit, Treehouse Finance, and so on and so forth. I'm also an investor in startups in the US called, let's say, Labs, Matrix, and also co-invested with the likes of A16Z, Polychain, Flitch Global, and many other. Previously, spent some time at Bits, leading blockchain security firm, and also Uniswap, the world's largest centralized exchange.
Okay, great. Thanks all for joining us today and lending your expertise to this panel so that we can cover the rapid development of cryptocurrency and tokenization in Southeast Asia. So let's dive right into DeFi. So we know that DeFi has a mix of ardent supporters and fierce critics alike. Yet what's a consensus among all of them is that its rapid growth in Southeast Asia has led to considerable change in the region. And Ken, from JP Morgan to Abra, you've been able to oversee and learn developments in Southeast Asia's crypto scene. So when it comes to crypto, what do you think is in the greatest need of change?
Yeah, I think very interesting question. I don't think that I would answer it in the sense where there's the greatest need of change. In fact, I would say a lot of great changes are already happening, mainly to do with, I guess, mindset change or mindshare change. What I mean by that is when you look at the types of industry players and the capital in the space versus today versus back in 2018, for example, I think similar to most of us on the panel, I've been very fortunate to be in crypto full-time building since 2018. Crypto has evolved in a very big way from its early days where people used to think of crypto as a place to make a quick buck to what is today, more and more people recognizing crypto as a 0-to-1 innovation and a paradigm shift in how finance is conducted. So I see a huge change already in the types of, I guess, back in 2018, more quote unquote mercenary capital, more short-term players from all sorts of backgrounds versus today. You see a lot of long-term investors from blue chip investors like BlackRock and Goldman and so forth, funding innovations. And I guess personally, I've also been receiving texts and calls and emails from ex-colleagues and friends who are in finance or in tech companies who all want to move into crypto, into Web3. And I think that's great for the industry. Obviously adds a lot of credibility to the industry. And I think the narrative has very clearly changed from crypto and DeFi is a scam to crypto's a new finance.
That's a good point, that this entire mindset change, as you mentioned, from mercenary capital to something more credible has been remarkable over the past few years. Gerald, Would you agree?
Yeah, absolutely. I think, like Ken, I echo the fact that most of the exciting developments we're seeing in the space right now are less about technological advancements, although lots of exciting things are happening on that front as well. From Sygnum's perspective, the most interesting things is that we're seeing right now are the change in the implementation approaches by we like to call it the next 300 million wallets in crypto, or the next 300 million investors in crypto. Just to give everyone a bit of a historical context, much of the last decade and a bit has seen obviously the explosive growth of cryptocurrencies and really this grassroots movement that spread like wildfire and brought hundreds of millions of investors, primarily retail investors from all around the world, into this exciting new asset class. Now we're seeing a shift and a passing of the baton from the early adopters to the early majority investors. And these are far more, we call them institutional accredited investors by profile. And their implementation approaches are going to differ, we believe, massively in that building allocations to crypto will less and less involve direct token exposures, so buying, selling Bitcoin, Ethereum, and any one of the other 10, 11,000 crypto assets out there. But implementation will take the form of investments in passive index funds, smart beta products, or active managers like crypto hedge funds, crypto venture capital, and private equity funds. So this shift in consumer behavior and addressing this sea change in the whole ecosystem, I think it's really exciting where all the innovation right now, at least from market participants like Sygnum, is focused on.
I see. I totally understand, and I'm sure we all can, that this shift in consumer behavior that you described and this wave of smart investment is signaling a sea change to the future. And now, Scott, would you agree that this is one of the most exciting developments in crypto, or what are your thoughts?
I probably have kind of a more nerdy answers to kind of this kind of fast in crypto, right? So I think there are plenty of pretty exciting technical development and kind of approaches in building blockchains, which I think is a huge focus right now, especially from the capital allocation perspective, right? So for instance, I think the Cosmos ecosystem is incredibly exciting. There's a lot of novel design in the sovereign blockchain problem space. So for instance, we can see companies like Osmosis, which is a decentralized exchange, and Cosmos, which building things like threshold encryption into their sovereign blockchain that allow them to mitigate certain forms of MEV. For those who are unfamiliar, MEV is basically minor extractable value, and it's a pretty hot topic kind of this past year with regard to its side effect to decentralized applications on the blockchain. Another facet is, I think, which is also somewhat kind of in the same realm of building Cosmos, is the shift to a more multi-chain environment, right? So in the past year, we've seen such an interest from not only alternative layer one solution like Avalanche, Near, Solana, and so on and so forth, but also in interchain bridges such as Acellar, Wormhole, and I think most recently Layer 0. And I think each of them is easily valued at north of $1 billion. So it's pretty clear that the ecosystem is valuing kind of these products very, very highly, right? There's also kind of the dark horse IBC, which is Cosmos bottom-up bridge system, which is unlike other blockchain systems that have only very recently think about this. Cosmos have been thinking about this for a while, which I think is very, very cool. I think there's also kind of the blockchain security companies very recently around the dog blockchain. There happened an unprecedented needs, which is true smart contract exploits or economic exploits and so forth. And I think it's very clear that we're going to see a steady for demand for blockchain security companies and toolings, right?
That's it. And we'll discuss more about the danger of bad actors in this space a bit further on when we look at the opportunity. But thanks for moving on. I think we have a great basis to discuss what makes Southeast Asia's crypto and tokenization scene unique. and Gerald, your experience, you want Sygnum to be able to regulated activities and also the new tokenizing solution in Singapore. What, in your opinion, makes Southeast Asia's potential for the token economy unique?
Yeah, so Catherine, we were very privileged that the MAS expanded our scope of regulated activity, as you allude to, beyond just asset management. We've been holding a license since October 2019, to more recently in-principle approvals for corporate finance advisory, dealing in capital market products, and custodial services. Now, the collection of these regulated activities will be to facilitate the performance of tokenization services for our clients. And we already see sort of massive interest from both the issuer side, so companies looking to tap on tokenization to do the financing, but also on the investor side. So investors who are looking to expand their portfolios away from maybe more traditional asset classes to include tokenized equity, securities, tokenized art, tokenized collectibles. A lot of that innovation, we've been very fortunate to pioneer out of Switzerland, where we've been conducting and helping clients tokenize assets since 2020. So ones that are familiar with Sygnum and have seen that we tokenized a Picasso artwork last year. We had 6,000, we fractionalized a Picasso painting into 6,000 units, which we then offered to clients of the bank in Switzerland, which were all oversubscribed. We also gave them unit holders the ability then to trade these tokens on our platform afterwards. We followed up from Picasso with a CryptoPunk, which saw similar levels of enthusiasm for investors looking to get access to these novel digital assets. Now, in Southeast Asia, I think the same demand exists. I think the universal problem of accessing these alternative asset classes, hopefully now with the advent of tokenization, allowing fractional participation at lower minimum thresholds, and also the promise of secondary liquidity on dedicated, regulated digital asset exchanges. I think it's a really exciting one, and we at Sygnum are very enthusiastic about bringing these innovative use cases to the Southeast Asia client base.
Thanks, Gerald, for that explanation. Scott, what would you have to add to that?
Well, I think in general, I think it's pretty kind of tough to answer this, since I think there's just a lot of different characterization of market participants, right? However, if I have one thing to say, I think it's pretty clear there are a lot of capital allocators in the space. They're kind of more kind of in the bandwagon train. So I think I'm more on the side of caution sometimes when it comes to also talking with people who are kind of coming from a more traditional background, in terms of helping them reason through building up their digital asset exposure, let it be through liquid cryptocurrency holdings, or even venture capital investments, right? I think there is kind of a very, very important aspect of investor education. And I think sometimes a lot of capital allocators in the space, for some reason, just ended up funding value extractive companies in the name of just simply getting market exposure, which I think can be dangerous in terms of not only for their portfolio, but also to kind of the health of the cryptocurrency ecosystem in the long term, right? So yeah, I think regardless it's for institutional or retail investors, I think there's definitely a lot of fraudiness right now. But I think at the end of the day, it's always important as people who are stakeholders in this space to always caution them and help them try to understand the risk profile, and also the volatile situations of the crypto markets. Yeah.
Right. Ken, building on this, what we've heard from Gerald and Scott about what it means, moving forward for Southeast Asia token economy, what would you think is the most ideal, or in a way, outcome or application for the token economy and crypto in Southeast Asia? We've seen how a digital asset management model could have a potential application for, let's say, the underbanked or the unbanked?
Yeah, I think that's a really interesting question. And I would kind of expand that a little bit more. So instead of just focusing on Southeast Asia, which is the topic of today's panel, I think when it comes to crypto, it's quite different in the sense that unlike, quote unquote, Web 2, or what we know today as businesses on the internet, where a typical startup from day one has a regional focus, depending on where they have their office, where they have their presence and their marketing and so forth. The difference with crypto and Web3 is that once deployed onto the blockchain and people start adopting it, it is global from day one. So beyond just Southeast Asia, I think whether the benefit in the form of financial inclusion, access to capital market products, allowing the unbanked to be banked, access to opportunities that in the traditional world were only available for accredited investors, for example, they're now all open in some way or form to anyone with an internet connection. And I think that is really the ethos and for crypto and Web3, which brings net benefits to societies globally, and in some ways seen as the largest and most rapid transfer of wealth in human history. And I think the best part is that we are probably just only getting started.
Thank you, Ken. I understand, Gerald, that you place a great emphasis on crypto and its developments in terms of decentralized global networks. Would you like to expand on that?
Yeah, I mean, I think everyone on the panel is certainly a proponent of more decentralization and more user control, right? Taking power away from some of the centralized technology platforms that have dominated much of our social media and existence really in the last decades. I think Sygnum really stands for actually the promotion of responsible regulation to facilitate the adoption of crypto and tokenized assets more broadly on a global basis, right? I think Ken mentioned rightly the fact that when launched, many of these token assets can have a global reach because they piggyback on our existing internet infrastructure today. But the question about the application of the relevant securities regulations, investor protection mechanisms that various regulators have determined makes most sense for their jurisdictions, those need to be enforced and applied certainly in a more diligent fashion than what we've seen in the early decade of crypto's emergence. Sygnum, as a fully regulated financial institution in two of the leading financial hubs in the world, I think our responsibility is to ensure that our clients, which number now over 1,000, we administer more than 2.5 billion of assets for these clients. I think we need to ensure that they can participate with complete trust and peace of mind without having to worry about, cybersecurity issues, but also more importantly, or as importantly, about tripping up any regulation that they might or might not be aware of.
That's a really good point. And it also touches on, I think, what Scott, you mentioned earlier, these regulatory questions and enforcement hurdles that, often allow unscrupulous actors in this space to run unchecked and potentially create these issues of trust for many users. And so looking ahead to the future, and I'll direct this question to all of you, in the case that any one of you wants to answer first, what are the greatest challenges lying ahead in ensuring and in a way developing this trust and diligence? And how can we overcome them?
Well, I think from our perspective as like a venture investor, I think like to a certain degree, we kind of like play a significant role in making sure that we're kind of funding founders that are value aligned and then kind of the long term of like kind of the crypto ecosystem, right? So I think the problem here right now is like oftentimes, unlike in traditional Web2 companies or like traditional companies where you have this long like vesting period and like kind of like exit opportunities that requires you to be fully aligned with the companies for like, say, 4 to even 8 years and so on and so forth. with crypto companies, you like oftentimes lack the kind of like, a buy-in due to like, early exit opportunities to tokens and like of that, right? So I think like venture investors have this like really high responsibility of making sure if they're like, putting their money into a company, these founders are not only here for the short term for value extraction, but also just like, in general in it for the long run, right? So like I often just like look for founders who are just like, even like, sometimes like founders who comes from traditional finance or big tech, are these really people who is kind of like, who just joined this space 2 months ago after buying their first NFTs and only just, want to get a lot of money and get out? Or are these people who are generally excited by the potential of the industry and wants to be around for like, the next like 5, 6, or even 10 years, right? And so I think like these are really kind of like, pretty easy to tell as like a venture investors, just like from like seeing them respond to questions with regards to like market stakeholders, or even seeing how the products are built, how they think about their customers, and like how they think about like, the long-term sustainability of their product. And I think that's really kind of, what's really important these days. And I think like, not only regulators should play an active role, but also investors and other market participants too.
I see. Ken, what would you say about this long-term sustainability? In order to overcome and in a way address these red flags?
Yeah, I think I would echo a lot of what Scott has already said, but maybe to add on the point of educating the market. Obviously, because we are in the industry and we represent industry players, we do have that responsibility, and we carry the baton as industry players to educate people that we interface with, that crypto is the next wave and the largest intersection between tech and finance, and will expand both in exponentially. And I think it's really important to clarify a lot of misconceptions in the space. A lot of people who are newer to crypto, they get their sources of news from headline news, and which may or may not be represented correctly. To understand the space, to connect with the right people, and really to help reduce that friction as we get more and more wallets and people transitioning to Web3, also to Gerald's point. And I think the second part of the challenges would be on regulations, also harping on what Gerald has already mentioned. I think having a continued open dialogue with regulators is very important. As industry players, we tend to be I guess, naturally at the forefront when it comes to some innovations or when it comes to certain trends. I think a two-way conversation with the regulator is very important for mass adoption. Singapore and the MAS obviously has done a very great job in not only the region, but globally positioning itself as a thoughtful leader, open to new ideas and flexible in policy making. And I think that's going to continue to be a focus for a lot of regulators in different jurisdictions around the world.
And Gerald, speaking to this two-way conversation with regulators, this specifically sort of references Sygnum Singapore's experience, or at least there's some resonance. How would you address this issue?
Yeah, no, I think what we have found is that regulators are more than welcoming of constructive dialogue that helps them to do the tough job of balancing the needs for introducing more financial innovation in their respective markets with the important role that they play with regards to investor protections. And it's a really fine balance to thread. So when we have engaged with our regulators in Switzerland, FINMA over there, or the MAS in Singapore, we've always found a very receptive audience. And I think some of these regulatory processes, the understanding, getting the regulators up to speed, do take time. The ones of us who are committed to the long-term game and to ensure that investors all over the world can participate in this asset class responsibly, I think we will see a lot more. I think as long as we keep our focus, keep our heads down, I think we will see a lot of progress in the next 3, 5, 10 years. Certainly crypto as asset class now is clearly here to stay. And so usually when at these panels, I like to issue a call to action for the listeners. Truly, it's everyone's responsibility to get informed and get involved, because it's a train that is certainly hurtling forward into the future at very high speed. And if you don't get involved in it, you will be left further and further behind.
Thank you, Gerald. And I think that segues very well into our first viewer question. Of course, to our dear audience, please feel free to add any questions in the Q&A box under this panel. We have an anonymous user asked, the decentralized and trustless elements of a token means that there is no single organization responsible when things go wrong, as I'm sure we're all aware. Are there any regulatory guarantee or insurance measures that protect users against intentional or non-intentional harms? Ken, would you like to take this?
Yeah, I think I can take a stab at it, and probably Scott will have a much deeper answer on it. I think, yes, you're right that DeFi and decentralized protocols have no central counterparty to take the blame, but at the same time, these new protocols are also run by a group of people, whether it be it a DAO, whether it be a protocol team. And I think we have seen in some instances where regulators have retroactively reached out or reprimanded some of these earlier players, say back in 2017 or 2018, a few years down the line, as they gather all the facts in place. So I think there is some misconception there. There are regulations in place today to take action where needed for these types of players. And maybe Scott, you want to add some stuff as well.
Yeah, I think I can kind of like on the follow on of that is that I think even if without the intervention of regulatory agencies, I think a lot of the players in the space, in DeFi space, almost always try to kind of act in good faith in terms of in terms of kind of helping make sure of solvency in the protocol in case of say a hack or an exploit, or say any issues with the protocol, since I think a lot of them thinks that these space can grow even more in the long term, and just cutting it short right now would be a negative EV play for them. And on top of that, I think we've started seeing kind of these uprising of kind of insurance protocol on DeFi as well. So companies like Cozy Finance, which I happen to be a very good friend of the founder Payum, is also building these the solutions to make sure that users have some sort of protection in case of a protocol failure or exploit and so on and so forth. Okay. So yeah.
Thank you, Scott. Again, moving on to another user question. To all panelists, what are you most optimistic and pessimistic about the future of token? I suppose this means the token economy. Ken, would you like to start us off again?
Sure. I think, I'm obviously very biased. I'm in the lending space, but I am very optimistic on crypto lending space. I think there is definitely a shortage of real world capital in crypto in general. That is obviously leapfrogging ahead as we see more traditional funds come in. We see more crypto specific venture capitalists come in. But I think in the short term, where, for example, Abra, we offer high yields on crypto, up to 8% on stable coins. That is structural, right? It's the reason why funding is high is because it's just a structural shortage of coins, of cash in the ecosystem. So I'm quite optimistic on the lending space. And I think just to draw a quick parallel, lending as one of the financial, primitives or basic functions in finance, we'll start to see a lot of them port over from traditional financial instruments as the first step. And the second step, as those functions get integrated into the blockchain, they then become composable with each other. You start to see a next wave of innovation of things that are not possible in today's traditional financial system. And you'll see crypto-specific innovations taking that forward. So I'm very optimistic on the tech. Pessimistic, I think it's quite hard to be pessimistic in crypto. I will defer this question to the next panel speaker.
I'm sure we're all optimistic, or at least trying to be as optimistic as possible. Gerald, would you like to go next with what you view as the most optimistic and pessimistic elements of crypto?
Sure. And like Ken, there's nothing really too much to be pessimistic about. So I'm going to focus on the silver linings and the optimistic part. I think for me, the most exciting thing about the space is just the concentration of people, like talent, as well as now investor dollars that are coming in an sort of accelerating and unprecedented fashion, which I think is absolutely required in order to solve some of the hard challenges of bringing these innovative assets to the hands of the end investor. It's been a challenge to get folks who understand both traditional finance as well as these decentralized token economy to come together and to innovate and pioneer new forms of investments, new fund products, etc. And I think with just the pipeline of candidates that at least we at Sygnum, but I think it must be universally across all the crypto companies that we're seeing, folks with seasoned, traditional investment backgrounds coming to the space. I think it bodes very well for the future of the crypto and token economy.
Great. Thanks, Gerald. Scott, do you have anything to add?
Yeah, I'll keep this short, but I think like my general thesis is that I'm always globally optimistic and like locally pessimistic, right? So of course I'm like kind of like optimistic in kind of the long term and the global macro aspect of like crypto, but oftentimes in kind of like locally we see a lot of noise concern like say facet of crypto, right? So for instance, like sometimes we're just like overly like hyped up about like certain things. And like, there's a lot of noise, a lot of companies doing the same thing with very, very little innovations. And I think that's like what oftentimes make me kind of like somewhat pessimistic. But in general, in the short term, like as we've seen before and many, many times before, like market cycles usually just like fix this for us. And then like in the long term, like, all just like converge into like a positive direction. And that's why I'm like globally optimistic.
That's great. Thank you, Scott. And that brings us close to the end of the panel. So we have one last question, and that is, to all of you, what do you think is the greatest misconception that needs to be addressed for our viewers to be able to take away with them? And Ken, would you like to start us off?
It's a very loaded question. And I think the way I would answer it is, especially in the region, right, in Southeast Asia, most people, when they think about crypto or who are relatively new to crypto in the last 1 to 2 years, when they think crypto, they think Axie Infinity, they think play to earn, they think DeFi and degen yield farms and all that. And I think that is great because it's different people are attracted to different things, and different innovations bring different types of people into the crypto network. But I think if you look a little bit beyond, and this is from my own perspective, coming, I guess, from a more financial background, crypto is really essentially the next stage in finance. So allowing things to move more efficiently, to be more collateral efficient. And what that basically means is that, in short, without going into too much detail, that the upside for crypto in terms of the size of the market, in terms of the types of innovations that are coming in the market, is probably just at the very, very beginning. And we should see a lot of changes over the next 3 to 5 years.
Great. Gerald?
Yeah, I think certainly a significant misconception for crypto investors who are just getting their feet wet, just coming to the space, is that you have to do everything yourself and you have to learn everything from crypto Twitter or Reddit or just consuming internet like stuff on the internet. I think the existence of trusted financial advisors like Sygnum and others who are fully regulated, who have a wealth of traditional investment experience and expertise to bring to the table, but who have also been crypto native now for many, many years. I think that the role of trusted guides, navigators like ourselves, means that you don't have to be as concerned as you used to be, right? When you come into the space, and you should rely on trusted third parties to help you with your implementation.
Great. For our final word, Scott?
Yeah, I think my one is kind of like my last remark, kind of like sweet and short. But the whole idea is I think there's a lot of misconception with regards to like, the free money in crypto, right? It's like oftentimes like there's like very, very little free money. And even if there is like, it's very hard to find. A lot of like, investments in crypto have like your own associated risks. And if you don't have like kind of this information edge or like, skill edge, it's like very, very often that you're like, exposing yourself to more risk than you are often are willing to tolerate. And so like, my kind of like advice for kind of like, not financial advice, of course, but like, is for like, for a lot of like, investors, regardless of whether they're institutional or like, retail, to kind of like be always wary and for the, like kind of have an eye on an outlook in terms of like, just keeping yourself in the safer side of things.
Great. Thank you, Scott. And that brings us to the end of this panel event. Thank you to our speakers for lending your expertise in this panel. And thank you, viewers, for joining us and investing your time with us. I hope you have a great rest of your day and rest of your conference. Thank you.
Thank you.